Gold prices retreating from those record highs. You can see it off just about 1%. The move lower following the inflation print that we got out this morning, showing that prices in the month of February rose more than expected. So this, of course, has investors questioning when the Fed is going to cut rates and if that first rate cut is actually going to happen later rather than sooner. Let's talk about it, what it means for the price of gold with George Milling-Stanley. He's State Street's Global Advisors Chief Gold Strategist. George, it's great to have you here. So let's talk about your reaction to the CPI print this morning and what you think maybe a potential delayed rate cut would mean for the price of gold in the short term.
It's been interesting to watch the way people's expectations have been changing. A couple of weeks ago, we were looking for 6 rate cuts starting this month. We're now looking at possibly 4, and the Fed is still saying only 3 likely, and not starting until the second half of the year. I think that those expectations are really what's governing prices right now. There's nothing real happening. It's those expectations as they change. I think that, you know, the CPI print that we saw, PCE, personal consumption expenditure, is the one that the Fed measures itself on. So I don't want to read too much into just one print on the consumer price index, but you know, it was higher than expected. It's showing that inflation is sticky, which means that Jerome Powell's message of higher for longer is going to be continued.
So if nothing materially has changed, is there a cap then on this near-term price of gold that we're watching?
I don't know about that. I think that expectations continue to change and will change again tomorrow, and that's really what we have to be looking for. If people get all optimistic again and decide that we are going to get 4 rate cuts as opposed to the 3 that the Fed says are likely, then I think that would be helpful for prices. So I'm not seeing this as any limit. I think the other thing, we did just set a fresh all-time high in the gold price, so a little bit of profit taking around that all-time high is not at all unusual. We saw the same thing with the S&P 500 a week or so ago.
George, when we do see that first rate cut from the Fed, how big of a catalyst is it going to be for the price of gold? How big of a jump could we be looking at?
We could easily be looking at a significant jump, and you know, tens of dollars, $50, something of that order. I don't know what it's going to do. I think it's more a case of anticipation of when that rate cut is coming that is going to be really the driver of the price going forward.
How can investors manage then the risk that, of course, is inherent with any investment, but specifically with gold at the juncture we find ourselves right now?
I think that the only thing that people can do is to take the long-term view. I've always thought that gold performs best as a long-term strategic allocation within the context of a properly balanced investment portfolio. That's really where gold shines, rather than trying to second-guess what the Fed's going to do and when the Fed's going to do it, and try to play things tactically. I think that trying to time markets is a mug's game, and people generally get it wrong.
George, how have the conversations that you're having with investors, with your peers, evolved here over the last several weeks as we have seen this run up in price? And the number one thing that you think investors should keep in mind at this juncture?
I think there's probably not a number one thing. I've got a number 1, 2, and 3 thing. I think people need to keep a close eye on what's happening macroeconomically. The inflation rate is obviously particularly important. I think that people should be watching what's happening geopolitically, and not just in this country with an increasingly ugly presidential election coming up, but also what's happening in Ukraine, what's happening in Israel, and potentially what might be happening in China. So that's 2 things. And then I think the third thing that people need to be looking at is what's actually going on in the supply and demand equation for gold. And we're not seeing any significant increase in supply right now, but we are seeing 1 or 2 useful increases in demand, both for gold jewelry, which is about 50% of each year's consumption, and for investment. So those are encouraging signs from my point of view.
State Street Global Advisors, George Milling-Stanley, thanks so much for taking the time here with us in studio.
Thank you. A pleasure to be with you.